Hello and welcome to Car Dealer Live. My name is James Batchelor, and today we are talking about why businesses need to adapt to ever-changing customer demands when it comes to paying for goods, services, and work to their cars, and in particular, the growth of digital payments. To talk more about this is the co-founder and CCO of Bumper, Jack Allman. Hello, Jack.
Hi, James. How you doing?
Very good. Lovely to have you on. Now, just a brief intro for our viewers. Bumper, previously known as Auto Service Finance, are specialists in helping customers split those sometimes very costly repair bills into interest-free payments, and are at the forefront of recognizing the changing ways customers are paying for goods and services. Now, Bumper has been ranked the 8th fastest growing fintech or financial technology firm in Europe of FT1000 and works with a large number of dealer groups in the UK and the Republic of Ireland. Now, Jack, very brief intro there. I mean, could you just tell us a little bit more about the business? I mean, its history and why you co-founded it.
Yeah, absolutely. I think you quite rightly kind of hit the nail on the head for kind of the very genesis of the business, which is helping people to spread the cost of service and repair work. That's very much where we started. And I think the key thing to that is pointing out that, as you rightly mentioned, for some people that is very costly bills. What's important to note is that what is expensive to one person might not be so to another, or vice versa. So, £300 to someone could be a bit of a challenge, to someone else not so. And it's about treating each customer as their own individual identity. So for us, we wanted to step in and ensure that we could bridge that gap, ensure people can actually get their car back on the road in a safe manner, but also in an affordable manner. And my background is in auto VHC systems, so vehicle health checks, so the systems obviously that help to identify this work, price it up, and then we could see this gap, this chasm that customers ultimately aren't saying yes to. And what we recognize is that in reality, everyone wants to drive a safe car, but there's a reason that they're not getting it done. And for some people, that might be convenience, but for lots, that relates to affordability, to price, etc. So from our point of view, we wanted to step in and say, could we provide something that could kind of bridge that gap in a very sort of nice and responsible way? And then equally, that was married up with James, my co-founder, who comes from a finance and a fintech background, who was able to put the concept and the product together. And that's really where we started the business from.
Yeah, and as we all know, cost is such an important thing for customers who will, at a drop of a hat, they'll move their business from one dealer to another, and quite often it's purely down to cost, isn't it? Now, one of the things which has really changed in the past few years has been, well, it's been forms of payment, hasn't it? I mean, particularly the growth of digital payments. I mean, why is this, and what have you been seeing on a wider level and also in the automotive industry?
Yeah, you're absolutely spot on, and there's been a migration, probably accelerated obviously by COVID, to digital payments due to obviously the physical implications or restrictions of COVID. So we've seen that in automotive. They've been really good at adopting these changes very, very fast in the way that they've approached that, and people aren't able to go and pay in traditional forms, whether that is face-to-face at the dealership or obviously through cash, etc. So from our point of view, we've seen that adoption really quick in automotive, where other sectors might have moved a little bit more early on it. And it's important from our point of view to kind of recognize that digital payments, and what I'll kind of use umbrella in that is buy now, pay later, which are digital payments as well, are forms of flexibility for the customer. So we're not saying that this is a one-size-fits-all, but we're talking about providing something that will provide a payment option that is comfortable for a greater set of your customers. And from our point of view, what we've seen is that the States, Europe, they've adopted some of these practices perhaps a little bit quicker than what we've seen here. But having said that, even here in the UK, we've got 1 in 3 Brits that have used buy now, pay later as a form of payment. So it's something that is growing very, very quickly. And equally, I guess if you kind of go back to your core method of payments and how you bank, 75% of UK adults now have online banking. So a huge section, the majority of the UK population, are very comfortable with digital payments albeit they're not perhaps recognised in the same way that we would perhaps think of digital payments in terms of online banking. So from our point of view, it's about bringing what the consumer's already used to in perhaps other sectors into automotive, where to the point of payment, they've probably been served in, up until that point, a very digital journey. Even more so now, obviously, with the advent of buying vehicles online. But certainly when it comes to the repair of that vehicle, it's been a digital journey up until that point, when someone maybe then has to come on site to make payment, or indeed what we've seen through COVID, which is collect and delivery, probably a little bit more popular. How do you serve a digital journey through that? Again, that's where our platform and similar platforms come into play. So we can provide you with a pay now or a pay later feature that can be served simply through an SMS or an email link, which is incredibly secure. Alternatively, what we've done is integrated our product into lots of third-party platforms to, again, just automate that whole digital journey as well.
Yeah. I think you make a really good point there, because, especially in the past 12 months, dealers, especially in the new car or the sales side, they've had to adapt to new digital sort of payment options and ways of selling, but possibly less so in the after sales arena. That's possibly, that digital progression has probably lagged a little bit. So on that, I mean, how can Bumper actually help dealers and garages? Because, let's face it, it can be a little bit of a confusing world, all of this, can't it?
Yeah, absolutely. So I think from our point of view, we try to recognise that, first of all, it's a very fragmented sector, again, in terms of the technology that's used from a DMS landscape, from VHC, from video, etc. So from our point of view, there was a huge undertaking that we took upon ourselves to knit a lot of that together and ultimately present the dealer and the customer with that option of something that kind of just connects that final point from a digital journey. So, to take a traditional example, someone will have had a vehicle health check done, they'll have had the work priced up, a video will have been recorded and sent to that customer. Well, what we've managed to do now is integrate our payment options into that delivered video or VHC. So the customer, at the point of reviewing their video, they can review the work that's required, they can approve and authorize that online. And now the key thing is that they can actually pay for that work. But equally, they then have choice of payment as well. So they can use our buy now, pay later product, so splitting the cost interest free, or they've got our pay now product. So if it's just a single payment, again, they can use Apple Pay, Google Pay, they can enter their card details, or we're in the process of introducing open banking as well, which is less frequently used, but is becoming an increasingly popular method of payment. Again, for the security it provides, but also the speed of payment. So it transfers to the retailer far faster than traditional payment methods.
Yeah. Now, I mean, customer demands have changed a huge amount over the past decade, haven't they? I mean, especially with things like PCPs and service plans. I mean, why do you think this is? Is it purely down to convenience, or is it down to people's financial circumstances? I mean, what are you seeing?
Yeah, you're absolutely spot on. I think the way that people have previously been, used to kind of affording things or paying for things was perhaps that mentality: if I haven't got it, I won't spend it. But in reality now, there has been a massive growth in payment options and flexibility, and people have alternative sources of payment. And this is something that we're seeing change in line with the kind of that changing customer base as well. So certainly a younger generation, and this probably people are quite familiar with this, are perhaps more comfortable with digital payments, with buy now, pay later, flexible payment options. What they're less comfortable with are, again, the more traditional forms of credit, so things like credit cards. So, for example, 50% of millennials don't have a credit card. So that's anyone who's 25 to 40 years old, which may surprise some people. But if you think that customer base is probably quite a core buying, purchasing customer base for a lot of garages and dealerships, and they will carry those trends through as they get older and the generations move forward. So from our point of view, I guess this is an increasingly debit dependent customer base. So this is why they're looking at things like monthly payments. So whether that is, the way that we consume TV and film with Netflix, whether it's gym memberships, TV licenses, obviously service plans, people are avoiding perhaps big lump sums and traditional interest-bearing forms of credit, which incur huge sums in interest, to things that are more debit dependent and fit their monthly installments. Because again, far easier to kind of conceptualize or budget for how am I going to pay for something if someone breaks it down into monthly installments and it's interest free. That's very different to having to rely, particularly if you're in that millennial category, 1 in 2 customers don't have a credit card. Well, when you're presented with the idea that you've got 300, 400, 500 pounds worth of repairs on your vehicle, what alternative options do you have to afford that? And again, this is where you then get drawn into, or as a dealership or a garage, that you're going to have to negotiate on the price. The customer doesn't have that flexibility. The work needs doing, but ultimately this is where you'll then see customers deferring work, or again, the devil is discount. And it's something that it sounds a bit bizarre, but we're on a bit of a crusade to kill discount in the industry, because ultimately it just erodes that value proposition of the work that's been done. You've got highly skilled technicians completing this work, but they're suddenly being kind of expected to give a discount, and you don't get that, or certainly it's less frequent in lots of other sectors where you can't go and negotiate the price of your laptop, for example, but they will offer different forms of credit to you in the form of buy now, pay later. And that has a far bigger impact on the conversion of that work and things like customer satisfaction and retention levels. So we've definitely seen kind of a migration away from traditional forms of either saving up for it and making cash purchases, but very much relying on things like credit cards, which carry significant levels of interest and debt.
Yeah. I think that's a fascinating thing, really, because you just presume the younger generation are just going to stick it on plastic, really, aren't you? But I look at my spending activities, and it's mostly subscription based things, or spreading those payments out. So really fascinating that. Now, you mentioned pay now and pay later earlier on. I mean, are we at the point now where dealers and garages, they really need to be taking this seriously and looking hard at integrating these different forms of payments into their businesses?
Yeah, I think so. And I think the reason that we are advocating the integration of these products is that we recognize there's an increasing kind of demand on the resource within a dealership or a garage from a headcount perspective. There's more and more systems that people have to log into, more and more systems that the customer might have to interact to. And from our point of view, we know there's a pressure on dealerships and their teams to serve an increasingly higher expectation level for each customer. So by integrating it, you automate it. And ultimately that means that every customer is treated in the same way. So everyone gets that same great uniform experience. But equally, going back to my earlier point, £300 to one person it means something else to another. But if you're automating and offering it to every single time, you're going to address those different customer needs and demands without having to make some sort of subjective assessment based on a telephone call, the way that they walked into your business. So from our point of view, integrating it is absolutely paramount. And we're seeing people holding on to vehicles for longer. So in combination with the perhaps changing spending habits and things that have been placed upon the customer due to the pandemic, and unfortunately for many, a pressure on their income, we're actually seeing people holding on to vehicles for longer. So I think it's now peaked at about 4.2 years. And at that point there, that's when the costs start to mount, the repairs start to increase, the warranty may lapse. So what has a dealership got at their disposal to help a customer transact and stay within their business? For us, again, it kind of dovetails nicely to where the service plan may finish. We then take over. So this customer bought the car on monthly payments. They perhaps took out a service plan for monthly payments, but then it comes to the wear part items. And this is where you can have that moment of anxiety, that moment of distress that someone, you perceive to be really expensive place to get your car repaired. I'm going to shop around. I'm not going to get the work done. Actually, if you integrate that, you're serving that to the mass of your customer base. And all of a sudden they're presented with something like, oh, fantastic. I can go back into monthly payments. It's going to cost me no extra. I'm therefore going to be able to approve 4 ties instead of 2. So it starts to really improve that conversion of work, while at the same time protecting, going back to my point about discount, protecting things like the labor rate and your recovery rate. And then, they walk away, certainly from what we see, with an enhanced experience, a very, very convenient experience, which, we see in our Trustpilot review. So our Trustpilot scores about 4.9 out of 5, of just over about 6,500 reviews. But it's important to go back to who that customer is. That in many cases, not in all, but could be potentially a customer that walks away a little bit aggrieved at the cost of their repairs, or rather the unexpected cost of their repairs. People don't often budget for the additional wear part items, perhaps through a lack of kind of understanding of the work involved. But however, if you put customers back into monthly payments, this is when you then start to see people go away with a surprise, an element of expectation that they weren't perhaps foreseeing to take place.
Yeah, yeah. Lastly, Jack, I mean, I know we've touched upon it a little bit already, but the past 12 months, I mean, has it catalyzed the speed of change in the digital arena for automotive dealers? And are you seeing more customers willing to spread the cost? I mean, what have you been seeing, particularly over the past year or so?
Yeah, absolutely. I mean, it's been a turbulent year, I think, for most businesses. Certainly April, May last year were catastrophic, I think, for everyone. But I think coming out of that, what we were really encouraged by was, I think, the way that the sector, the industry, quickly managed to reopen their doors. And then we saw a huge surge of activity back into June. But then coming out of the back of that and looking probably kind of post-June to now, I think what's really encouraging from our point of view is that we've seen a lot of our existing businesses and new businesses coming to us saying, right, well, we can serve our customers with digital payments, integrated payments, and monthly payments through our after sales arena. Where else can we utilize this? Because we recognize that giving the customer that flexibility, giving them that comfort and convenience is actually really important to retaining that customer and again, exceeding their expectations. So for us, we've now got our partner businesses, and as you said, I think on the intro, we work with just over 60 of the top 100 groups. We're seeing them come to us and say, well, can we use you for accessories? Can we use you for add-on products through the sales environment? Can we use you in your body shops to help customers fund their insurance excess? All of which are these areas that we can help serve to ensure the customer has that same experience right from point of purchase to maintenance of the vehicle to perhaps the part exchange and where they go on to the next generation of vehicle. So from our point of view, we've seen a massive acceleration, which is really encouraging and something that we, again, integrating our product into, whether it is lead management systems, if it's VHC tools, if it's DMSs, that's where we're then starting to see this real growth in digital payments and something that we expect to see continue moving forward. Fantastic.
Well, we're going to have to leave it there, I'm afraid, Jack, but some really interesting insight there, and let us know how you get on, if this trend continues, and keep in touch. But
absolutely,
some fascinating insight. Thanks very much, Jack. Thanks for coming on.
No problem. Thank you very much, James.
Well, that's it for today's Car Dealer Live. See you again very soon. Bye-bye.